Hey guys, welcome to Forex Mechanics. Another quick video today, and today being a Monday, it's 13th of January, and I will share an example with you based on currency strength and weakness about what happened today. Please watch this video right till the end because the information that I'm going to give you in this video is really going to help you, especially if you are just starting out in Forex trading. It is really going to help you validate your trade entries and cut down bad trades. Okay, so do indicators work in the forex market? So when I say indicators, I'm talking about any indicator. It can be RSI, MACD, CCI. There are hundreds of them. So do they really work in the forex market? Yes or no? Now, individually, these indicators have certain criteria. They are only supposed to tell you, or it's a guide to tell you whether you should be buying or selling, right? So do these indicators work? Yes, they work because they do their job of only telling you whether you should be buying or selling. Now, when I say that the indicator is telling you to buy or sell, that doesn't mean that just because you have an indicator or maybe 3 or 4 indicators telling you to buy, you just go ahead and buy it. It will not work like that in the forex market, right? So if you're new to forex trading, please watch this very carefully. I am sure that right now, based on the strategy that you're using, you can just implement this. I am sure you will see change in your results or trading results tomorrow itself, right? So overnight you will see a change. So here in this example, I have taken some indicators. So you can see I have some moving averages, I have a MACD, and here I have an ADX, right? So basically the ADX is nothing but it tells you whether there is a trend. So if the trend is strong, then you will see that the ADX line, which is the line here on top, if it's above the 20 or the 25, depends on what threshold level you're using. If you see that it's above that level, it basically means that market is in a trend. MACD, again, I'm sure a lot of you must have used it. So this is the red line, which is the signal line. When it drops below the zero, basically it's telling you to sell. When it goes above, it's telling you to buy. A histogram also can be used on its own as a signal whether you should be buying or selling, right? So you can see the indicator here is just doing its job of telling you buy or sell. So here you can see the pound AUD. If I just simply look at the MACD, it gave you a buy, gave you sell, buy, multiple entries, right? So it's giving you entries of buying and selling. Now the issue is, how do you really avoid this range, right? So this basically here you can see that price is in a range, right? So but your indicator is still giving you buy and sell signals. So if you're blindly following the indicator, then I am sure that you have just made loss, another loss. So basically around 5 or 6 bad trades in a row, right? So because price is not really doing anything, it's not really doing anything because there is no strength or weakness. So is the indicator doing its job? Yes, it is simply telling you buy or sell. Are you doing your job? Maybe not. Why? Because it is not the indicator's job to really tell you if the market condition is in the favor of that signal or not. So today is the 13th of January. You can actually open up your charts and check this yourself. So if you look at today, you can see that your moving averages gave you a signal to sell, and the MACD was also trading down. So it was a good day to really sell pound, right? And if you look at the pound pairs now, you can see how the pound was dropping. So the pound USD, you had pound Swiss franc, pound yen, pound CAD, New Zealand, all the pound pair. Here the euro pound, you can see how it is going up. So you can see that all the pound pairs are reacting in the same way. Now because of that reaction, suddenly this trade entry worked in your favor. So do you think the indicator did its job? Yes. What did the indicator do? The indicator only told you that you can sell. So your indicator told you moving average cross, it told you to sell. Now, how did you know that this specific signal is going to work for you, right? You knew this may, or there is a high probability that this will work in your favor because before entering, you did some basic analysis. Here you can see it was the pound AUD. So right at this point here, so even if you simply look at it this way, right? So let's say you've got a signal right here. How do you know that this would have worked? It's simply because from this point on, you knew that for this signal to really work, pound needs to be weak or the Aussie needs to be strong. That's the only case, that's the only way it's going to work. So if pound is weak and the Aussie is strong, this signal would work. So the indicators have done their job, right? The indicators has given you a signal, just told you buy or sell. But what happened then? Let's say when you started monitoring all the pound pairs, you saw a similar behavior on all the pound pairs, right? And you suddenly saw that the pound was weak, and eventually what happened is that trade worked in your favor, and you saw that the pound dropped, right? The pound Aussie dropped. It dropped. Did it drop because of the indicator? No. But did the indicator do its job? Yes. The indicator's job is only to tell you whether you're supposed to buy or you're supposed to sell. It is your job before you take the trade entry to validate whether you should be taking it or not. And this is why Forex market is way different than trading stocks, because indicators on their own in the stock market or any other market that you're trading holds a lot of merit. But in the Forex market, I don't really think that it holds a lot of merit, because here the indicator's job is only to tell you buy or sell, right? But the validation is simply going to happen by analyzing strength and weakness. So if you can't analyze strength and weakness, you will just end up taking all the signals that the indicator is going to give you, and you will only end up having more bad trades and less good trades. And all those good trades, when you back test, when you go back and check, you will see that all the good trades that you've taken it during the time when everything was in your favor. So suddenly you will see that this trade worked for you, because I'm sure on this day, either the pound was strong, right? The pound was really strong and the Aussie was weak, right? That's the reason why this moved up. So the pound was strong and the Aussie was weak. That's why this moved up. Similarly, today, the most recent example, pound was weak and the Aussie was strong. So the trade really worked out, right? So like I said, if you're new to Forex trading, please avoid this mistake. Even if you have indicators, or I'm not saying that change your indicators. You can use it. All I'm saying is that you need to look at currency strength. You need to validate your trade signal or your indicator signal with strength and weakness analysis before you really take that trade. Now here you can see, if I just remove both these indicators, suddenly you just have one indicator remaining. So even if I simply use one indicator, my job is at points like these. So I had a buy entry. I have to validate whether at this point, if I have to buy, is the pound strong and the Aussie weak? If yes, then I can go for it. Otherwise, it's not going to work. And then it reverses on me. So all these trade entries here, you have a sell, then you have a buy, you have a sell, a buy. So you can see here, all those trade entries that worked are those days when both the currencies were moving opposite. That's the reason why this specific trade worked for you. What is your job? Your job is to simply make sure that you avoid these signals and look for or trade those signals when the strength and weakness is in your favor, right? So it's very important that you follow this. So indicators' job is only to tell you buy or sell. That's about it. But in the forex market, you can use the indicator to tell you whether to buy or sell, but it is your job to validate that signal with strength and weakness. And if the conditions are valid, only then you take the trade. Otherwise, simply give it a pass, because you can always wait for the next day, and because the indicator is going to give you signals every day, right? So your job is to validate the signal and then take the trade, right? So I really hope you like this video. I want you to just go to the pound charts today, so you can simply look at the pound pairs today and you will see the market behavior. You can see how all the pound pairs behaved in the same way, and that is the reason why today all the pound trades would have worked for you, right? So if your indicator gave you a sell signal on the pound pairs, you will see there was a 99% chance that, or a 95% or a 90% chance, or a higher percentage chance that that signal would have worked. So if you really agree to this, I really want you to comment. Please feel free to comment and ask me if you have any questions. I usually respond to all the questions. And apart from that, if you really want me to make some other videos, please let me know. I will try to make an actual trade video in the next video that I make. I'm sure that will help you as well. Please subscribe. I want you to like it, share it with your trader friends, and that's about it. So I'll see you in the next video. Until then, thank you for watching. Bye bye.